them weekly. We had so much to cover back during the pandemic, but these have been wildly popular. It is a wonderful way for us to be able to share information with our contractor members and partners relevant to the industry, relevant to general business operations, and other things that are top of mind. So I'm very excited today to have two speakers and two topics. First, we will hear from Bryn Nelson. Bryn is with the Colorado Office of the Future of Work, and she has some very exciting information to share with our contractor members who employ apprentices. And then once Bryn has an opportunity to go through her presentation, and you can ask Bryn questions following, then we will hear from Kristen White. For those of you that have been on our calls since we started this in 2020, Kristen has been our subject matter expert in all things related, not only to COVID and safety, but OSHA and labor and employment, and a whole variety of other topics that she covers within her firm at Fisher Phillips. So we welcome both Bryn and Kristen. If you do have questions, you can either place them in the chat, or when we call for questions, you can unmute and we'll call on you for Q&A. We have until about 8:30 this morning, so let's get started. Bryn, welcome, and thank you for being with us this morning.
Of course, thank you for having me. So I'm going to go ahead and pop something into the chat real quick, just so to give some context of what I'm going to be talking about, and then share my screen. Let me know if you can see it.
We can, we're good.
Oops, I'm going to go slideshow. How does that look?
Perfect.
All right. Well, good morning, everyone. As Marilyn said, my name is Bryn Nelson. I am the IDEA Grant Coordinator at the Office of the Future of Work at the Colorado Department of Labor and Employment. I'm here today to talk about a current funding opportunity that our office is offering that aims to expand registered apprenticeship opportunities throughout the state of Colorado. As you can see, these are called the Accelerate Apprenticeship Grants, and I'm going to be going through that opportunity today. So overall, the goal of the Accelerate Apprenticeship Grants is to encourage employer adoption of registered apprenticeships in the state of Colorado. We define employer adoption as either an employer registering their own apprenticeship program or joining an existing registered apprenticeship program. Employers are the only eligible entity for this funding opportunity, and specifically employers that are not yet involved in a registered apprenticeship program. This is a non-competitive solicitation, meaning it is first come, first served. We did launch the opportunity back in mid-November, and so it will remain open until all of the funds are obligated, or until they run out. For this grant opportunity, we have a total of $600,000 that is being given out in awards of $7,500 per employer. The $7,500 is provided in two portions. So the first portion is provided once the employer actually adopts registered apprenticeship, whether that's they register their own or they join an existing registered apprenticeship program, and they have to also hire at least one apprentice. So then they would invoice for that $5,000. And then once they retain one apprentice for 6 months, then they would receive $2,500. In addition to grant funds, recipients also receive technical support from our office to either register their own program or join an existing. Our office has specialists that can help navigate that process. And then as far as just a bit of a timeline here, I won't go too into depth, but as I said, we did open the application period on November 18th, and it will close when funds run out or through March 1, 2025, whichever comes first. There's also a couple stipulations in here that I'm happy to go into, but essentially the employer would have 1 year from the date of the grant agreement to actually join an apprenticeship program or register their own and hire one apprentice. So they have 1 year to do that. and then 2 years essentially to retain an apprentice for 6 months. I know that's a lot of information. I have a detailed opportunity description that I can put into the chat that'll probably explain it a little bit more in depth than I have time to do here today. As I said, eligibility, employers are the only entity that are eligible for this grant. They need to not be yet involved in a registered apprenticeship program. And they do need to apply before they become involved in the registered apprenticeship program. They also need to intend to employ apprentices in the state of Colorado. And they also cannot have received our Scale Up grant, which is a grant opportunity that is also funded through our office as well. As far as the process goes for this, because I know since it's a non-competitive solicitation, it looks a little bit different than maybe a competitive one. And so really the process is that the employer would apply. So we have a pre-application checklist and an online application. They would go under contract with the Office of the Future of Work. So they would receive a grant agreement. They would be referred to our specialist team to help them navigate either registering their own program or joining a new one. They would then actually join that program or register their own and then hire one apprentice. And our office always provides support for referrals to hire. And then they would retain that apprentice for 6 months in order to get that second portion of the grant. I do want to say that we have intentionally made this process as easy as possible. We want to just ensure that not only the application process, but also the grant agreement process is as seamless as possible, because there's always going to be because they're federal funds, there's always going to be a couple extra sort of hoops to go through. But the bottom line is our office has really been intentional with this application process and this funding opportunity to make sure it's as accessible as possible. There are some reporting and invoicing requirements here. We are requiring that the employer use the federal apprenticeship system Rapids to upload documentation, as well as submitting a success story. The employer also then, once they hit those milestones of registering their own program or joining one and hiring one apprentice, as well as retaining that apprentice for 6 months, they would submit a simple invoice to our office in order to receive the grant funds. There is just a requirement of maintaining documentation and a couple others. Expenditures can't happen before the grant agreement starts, and all expenditures must be allowable. There are certain ways that you can use these funds. It's pretty broad, but I would encourage you to go to our opportunity description, which I can put into the chat, to see exactly how the grant funds can be spent. And then finally, how to apply. Really our website that I put into the chat, and I'd be happy to put it in again. It holds all of the information necessary in order to learn about the funding opportunity as well as to apply. So you would really just review the opportunity overview and go through the pre-application checklist. There's a couple required attachments that you would have to complete, which are on the website. And then you would complete the online application on our website. So please, we are saying that we're, again, in an effort to make it as easy as possible. If you do go through the opportunity description, go through the pre-application checklist, the application should take no more than 20 minutes. So again, we're really trying to speed the process up and make it as easy as possible. We do need you to just make sure that the application is filled out in its entirety in order for your application to be eligible. So I know that was really quick, and you probably have some questions. So I'm happy to answer any of those real quick, and then I'll pop a couple other resources into the chat for you to view.
Perfect. Bryn, thank you very much. There are a couple of questions that I have, and I'm sure that these are top of mind for some of our other contractor members as well. So IEC Rocky Mountain is a USDOL registered apprenticeship program. So some of our contractors that do Davis-Bacon public sector OA work are already registered. So I'm assuming most of them are not eligible because they are already companies that would have registered apprentices. All of our contractors have apprentices registered through the state of Colorado through DORA's requirement, but not all of them are registered formally through the OA program. So for those that are that employ apprentices but are not formally part of the OA process currently, would they be eligible for these grant funds?
Yes, that's correct. So
Okay.
those contractors that are formally part of the registered apprenticeship program would not be eligible. However, you hit it on the head. The ones that are not formally part of that quite yet, they would, if they apply before they, go through that process of doing the Appendix D or the employer agreement, then yes, they are eligible.
And if they already employ some apprentices, but they're hiring new, could they register with the new people that they're going to hire? Would they be?
Yeah, so it could be the new people, or they could just formally register the ones that they currently have.
Okay.
They just need to be added into Rapids, and it's just they only have to hire a minimum of one, right? So I know, so a common question that I get is, okay, so do I get a grant or $2,500 or $7,500 for every apprentice that I hire? And the answer is no. It's only $7,500, and I recognize that isn't always, it's not a lot of money, which again is why we're trying to make this as easy as possible. But we're really just trying to incentivize that employer adoption and making it sort of like, hey, if you join it, you get $7,500, and it is a non-competitive. So as long as you're eligible, we are going to be, and we have funds, then we are going to be moving forward with a grant agreement.
Okay, perfect. And that helps clarify that if you're not already, if you're an IECRM member with apprentices in the program, but you're not formally registered through the OA process, then you can go through the process of applying based on the guidelines that Bryn just described. And Bryn, is it possible for us to share your PowerPoint presentation? I know you provided links, but if you don't mind emailing that to me, we'll make sure that in our notes from today that the PowerPoint goes out along with the resources. So everyone who's on the call today that registered for the member forum will be getting this information in an email. And I also will boldly go ahead and say this is something that we will send out to all of our contractor members, not just those that are participating in the member forum today. The second thing, the second question I have is, you mentioned the Scale Up grant. Are you able to describe to us what the Scale Up grant is, just so that if we hear that term again, or perhaps some of our contractors are even eligible for that?
Absolutely. So our Scale Up grant program, both the, sorry for the background noise, both the Scale Up grant program and the Accelerated Apprenticeship grant program are two funding opportunities that are actually funded through the same federal grant that is through our office, the IDEA grant. And so they both are similar in nature, but they're trying to accomplish slightly different things, and they have different structures. So the Scale Up grants, we released a cycle back in July of last year, and we have a total of almost $2 million for the entire grant, and we released $1.2 million back in July. So we will be releasing the remainder of those funds. We're going to most likely be putting out the second cycle in spring. The Scale Up grants are a competitive solicitation, meaning that it would be like the whole formal, apply, a little bit more detailed of an application process, might I say. And then there is a formal sort of evaluation and review by a evaluation committee. And so much more competitive in nature. The scale-up grants, so the accelerated apprenticeship grants aim to encourage employer adoption specifically, whereas the scale-up grants are open to any entity that is interested in either registering an apprenticeship program or expanding on their current one. So it's really aimed at more the sponsors rather than anything else. And they are for up to $50,000. So they are a possibility of more funds, but again, it is a more competitive process. And so I would encourage anyone who's interested in the scale up grants to go to our website, that website that I put in the chat. And if you scroll below the Accelerate Apprenticeship Grants, there's a little section that says Scale Up Grant Program. You can get on we have a newsletter that will send out communications as far as like strict eligibility and any of those sort of more details about the scale up grants. We're still sort of in the process of finalizing that for the next cycle. And so I don't have, specifics as far as the scale up grants go.
Gotcha. So we IEC Rocky Mountain, as a registered apprenticeship sponsor, would be eligible to apply if we wanted to expand in a certain aspect of the industry or offer some specific training or other things. So
correct. Yep, absolutely.
Yes. And so one of the questions is there a link for the grants? Yes, there is a link currently in the chat. And I think you've just put it in there again. Thank you, Bren. And we also will be summarizing all of these links and resources from today's entire forum and sending it out to everybody that's on the call, as well as I said, to all of our contractor members. Let me just do a really quick look to see if there are one question. Are the funds that are granted to the employers, is there any kind of required designation for how the funds are to be spent?
Yes. And so for more detail, I'll provide an overview and then definitely encourage everyone on the call to go into the opportunity overview description and read that pretty thoroughly. I'll put the link into the chat, but generally, for the accelerated apprenticeship grants, the funds can be used for essentially costs associated with starting up a registered apprenticeship program, specifically for the employer. So the big caveat here is the funds cannot be used for apprentices specifically. So apprentice wages, as well as apprentice sort of supportive services, any apprentice specific tuition, that is not eligible under the Accelerate Apprenticeship Grant, but rather any sort of costs that are being accrued by the employer to sort of start that up, that would be eligible. And so things like mentor wages or salary for someone who, salary for the staff member who maybe needs to go through that process of registering, or any sort of curriculum and things like that are all eligible. So I'll put the opportunity description into the chat, and then I definitely encourage everyone to go through and read that.
Or if they need to do different tracking, if they're investing in software or something, is that something that would, you could pay for the license or program costs for? Yep. Okay.
Yep, exactly. I think the only thing I'll say is, again, we will have, any interested employers apply, and then there's a period in between when you apply and when we actually, get you under a grant agreement. And so just ensuring that no sort of costs that you want to be reimbursed for are happening between that period. We want to make sure that you're under the grant agreement, and then you can start, sort of accruing costs and be able to invoice for that. But again, that's in the opportunity overview.
Based on your experience since November, about how long does the application to approval process take?
That's a good question. I think safely it's about 4 to 6 weeks.
Okay.
Yep.
Uh,
Yes,
should
absolutely.
contractors start with a SAM ID? That's a good question.
That's a great question. Yes, if you are interested in applying, the SAM ID is a federal number that you have to have in order to receive federal funds. The accelerated apprenticeship grants are federal funds, and so a SAM ID is required. So I would encourage anyone who's interested to start on that SAM ID process now, because it's supposed to be an easy process, but I think that they're experiencing a little bit of a backup. And so I would go into their website. We have detailed instructions in our opportunity overview as to how to get that SAM ID. We have a whole PDF and everything.
Well, and we'll make sure we highlight that. We just went through that process of updating ours.
Yes.
And so we'll make sure that contractors, because that's going to be something very foreign and new to
Yes.
most of our contractors. So we're at 7:54. I think we've covered most of the questions in the chat. We'll make sure that we go through. Thank you for providing your contact information. If you have any other questions, feel free to ask now or put them in the chat. And if not, we will, I'll give you just a few minutes to unmute. And if not, we will thank Bren for your time today. We really appreciate it. Just by way of full disclosure, I serve on the State Apprenticeship Council, which is looking and supporting all of these efforts to stand up this new state apprenticeship agency that is part of the Office of the Future of Work and the Colorado Department of Labor and Employment. So we'll hear more and more as we get closer to the transition that will take place between being a federal OA registered apprenticeship program and falling under the guidelines of the state. And this is one of those things that that I know that the Office of the Future of Work is trying to encourage, is getting more of those as we make this transition, really making sure that we have everybody registered through that formal program. I know I see that as part of the incentive for what's happening. So Bren, thank you very much. Happy New Year. Really appreciate your time with us today. You're welcome to stay on if you want to hear about family and labor and employment issues and other things. And with that, Happy New Year, Kristen. Kristen White with Fisher Phillips.
Hi, good morning. Thanks, Marilyn. Okay, I'm going to share my screen here. I may have to flip them once we get it shared, but we'll see how that goes. Let me hit the right one here. All right, are you seeing the right screen?
We are. You are good to go. Technology is in everyone's favor today.
I know, I like when that works, so I appreciate that. Oh, I'll try to move that off of there. Oops, hold on. Let me see if I can move. There we go. Okay. All right, so what I've got for you today, I put some slides together. I know we do these a lot of times just talking, but I thought this might be helpful because Marilyn can send them out afterwards. And it's got, trying to summarize family for us, and then just some other things that are already starting this year. So let's just talk generally about with family. And, this is what we're going to cover today. We'll get it done in about 20 minutes, so don't worry about that. I'm going to see if I can move that up. I don't know if I can. Nope. Okay. We're going to talk about eligibility, what that looks like, who's eligible, how long they can go out for leave, the amount of benefits, what you're doing with premiums, which hopefully everyone's got that set up going now, who has employment protection. And I think this is probably the most important, the coordination of benefits. I think that's the hardest part with family because it's not intuitive what they've done with this law and the regulations. So let's talk about that. And then kind of the notice and documentation that you've got to have for your employees. So, what is our purpose here? So it's going to cover all employers. So, we get asked a lot, does it matter, I only have 5 employees or, it's not that FMLA 50 employee cutoff. So this now applies to all employers regardless of size. And this operates like the unemployment comp statute as far as like an insurance program, where, you're going to make a deduction. But there is a provision for approved private plans, and we'll talk a little bit more about that. There is overlap with FMLA. So if you are an employer who has over 50 employees, you've been providing FMLA, you need to put some language in your handbook about how FMLA and family will run concurrently, assuming that the reason that the employee's gone out qualifies for both. Otherwise, you may be stuck with stacking. So you've got to make sure you get that language in there. What it provides is essentially 12 weeks of paid family leave funded through a payroll tax that's paid by employers and employees that's split 50-50. Now, there is an additional 4 weeks that someone can get for pregnancy or childbirth complications. So that's additional from FMLA. So just keep that in mind, that there is this potential 4-week extension. Now, you've got to start pulling out the premiums as of now, January 2023. And that's true even if you're going to apply this year for a private plan. You've got to pull your premiums this year. Now, benefits don't start till next year. So everyone taking leave for you to plan for that is next year. But this year is the premium time that you're going to be wanting to pull out the money. It's going to be remitted quarterly to the state. And I believe everything's open now on the website and to get registered and make sure that's happening. They did put on the website that for this first quarter, I think they're given a little bit of a grace period. So don't fret if you're having some trouble getting that going. There is a little bit of a grace period this first quarter. So eligibility, what does that look like? So for a covered individual, it's anyone in the state who has earned $2,500 in this past year, this past base period, or they elect coverage because they're self-employed or local government worker. So for you all, it's typically going to be this $2,500. So unless someone has, and that means within Colorado, not with you. So unless someone's just moved to the state, they're going to be eligible to be able to take this leave. So that's also a big difference with FMLA, because you've got this, it's a pretty low threshold for someone to then qualify to at least take this leave. So here's the different kind of leaves. So, typical, a lot of them are similar to FMLA. So you've got the birth, adoption, placement within the first year, family member with serious health condition, that could be domestic partner, their own serious health condition, military leave. Now, this safe leave, this is the one that's going to be different than your FMLA, right? This is not a category under FMLA, which is kind of your domestic violence leave. If someone, is a victim of it, they need to get a protective order, maybe they need to move, out of their house. This would qualify them for leave under family. So just keep that in mind. This is also a qualifier under HFWA, the paid sick leave that we've talked a lot about the last couple of years. And we'll talk about how these two laws work together. But just keep that in mind, that this is a qualifier that's not under FMLA, that will be under family. So family, what's the duration? So it's 12 weeks based on a rolling annual year. You can, like I said, you can run concurrently with FMLA. You can get the additional 4 weeks with complications. Now, similar to FMLA, it can be intermittent. So for those of you that have dealt with FMLA, you understand what I'm saying, that it doesn't have to be that I go out and take a chunk of 12 weeks of leave. So one of the hard parts here is that the state has defined this intermittent as 1 hour or shorter if the employer uses shorter increments. So, this could be where, I need to leave, an hour a day to go get some therapy. Or I need, just a week off, especially if it's that safe leave. So, the admin part of that leave is going to be a little complicated, especially for those of you that are not used to and have not had to manage FMLA leave. So please keep, please keep that in mind when you're figuring out how you're going to set this up for next year when the people become eligible to take the leave. So the employee is supposed to make reasonable efforts to schedule so as not to unduly disrupt operations. Now, this language, I would not be relying on it very much to deny leave, right? I mean, unduly disrupt operations. My guess is CDLE is going to say that's a pretty high bar. So I would just keep that in mind. I don't think this is like a get out of jail free card or anything, just because you may be down and short an electrician, or you may be down a man on your crew. They're going to expect, okay, well, let's figure out how we cover that. 30 days advance notice is part of the law. So the employee is supposed to give you 30 days advance notice if foreseeable. So I mean, this usually comes up with pregnancy leave, right? That's not something that, comes up that often, unless maybe we're dealing with adoption leave potentially. But it's if foreseeable. So keep that in mind, that this is not a hard line that means you can deny the leave. Just means you've got to look at, was it foreseeable? Otherwise, it's supposed to be as soon as practicable, which, as we know, the state typically defines pretty broadly. So please keep that in mind as well. Marilyn, I can pause there if we've got some questions coming in, or I can keep going. What do you think makes the most sense here from the chat perspective?
Let's see. We haven't had any questions in the chat. I think everybody is listening intently.
Okay.
So I would say
Okay.
for John.
Okay. That sounds good. Let me check. I was looking at my time here. Okay. We're really good on time. So we'll have plenty of time for questions. So what's our benefits here? So this is where the employees will be applying to the state fund to receive a portion of their paycheck, and it is dependent on the average weekly wage. So they do not make the full 100% of their wage. There is a benefit cap at $1,100 a week, but that's only until 1/1/25, and then there will likely be an inflation increase. So we'll be watching for that, but at least through the first year, this will be the cap of leave. Now, this was one of the complaints about the program when it was passed, is that the percentage that employees get, most people felt was too high and was going to bankrupt the program. So we'll see how that shakes out, because it is a pretty high benefit that they can receive. Now, this is important because this is a difference with FMLA, is that under FAMLI, employees are not required to use PTO before taking leave under FAMLI, but you may allow them to use accrued PTO to cover the remaining balance to make them whole while on leave. And I say allow because this second part is an agreement with the employee and employer. And we'll get to that a little bit more when we talk about how benefits overlap. But, with FMLA, you could say, okay, when you go out on FMLA, you're going to exhaust PTO. You cannot require that with FAMLI. So essentially, employees can stack leave here because the employee and employer can agree that, okay, if you're only getting 60% or 50% of what you make from the state on the wage replacement, you could use your PTO to essentially make yourself whole. Now, you can't go above whole, so they can't use their PTO to make more than 100% of what they would have made with their wage, right? So if I take what the state's given me, I take my PTO hours, the most I can make is whatever my weekly wage is or daily wage. You can't go over that. But the employee and employer have to agree to this kind of make whole with the PTO. Depending on, from a financial standpoint, you may have to evaluate what that looks like from a legal standpoint. I like that idea because then you're not having someone come back from 12 weeks and they still have another 2 weeks of PTO, right? They're going to be using it while they're out. So from a legal perspective, I think that I like that idea, but I understand you have to look at it from a financial standpoint as well. So premiums, they've started now. It's a shared fee between employers and employees based on 0.9% of the wages. This is the rate set through 2025. If you have 10 or more employees, then you can move half of that deduction to the employee. So you're going to pay the 0.45, the employee pays 0.45. If you have less than 10, there's no required employer share. It's just the 0.45 that you can pull from your employee. Now, you can choose as the employer to cover the full 0.9%. We have seen employers do that as a benefit, kind of a part of their incentive plan and hiring workers. You could do that even as a small employer. You could say, we could push this to you. but the 0.45, but we're going to pay it ourselves. So just keep, you can always be more generous, if you will. But the most you can move to the employee is the 0.45%. And there is a calculator on CDLE's website that you can look to see if an employee's wages are X, how much is coming out per year. And we've had some employers putting that in their policies so employees can have an example of how much is going to be coming out of their wages for this additional tax. So what are the leave protections? So there's a right to take this leave. As I mentioned, it's that really low $2,500 threshold that they've made within the state. And I know the no retaliation, so you can't fire them because they want to take the leave. Now, this is important, is that the job restoration is only for those that have worked for you 180 days or more, meaning that if I've only worked for you a month and I come and say, I need 12 weeks of leave, you have to let me take it. But you may say, Kristen, we'll just have to see when you come back if your position's available. You don't have to guarantee it. Now, you can't retaliate. So the trick being, you can't say, well, take the leave at your own risk, but we're not going to put you back to work when you come back. But if from a work perspective or a needs perspective, my position no longer exists, you had to replace it, that would not be retaliation. From a legal side, that's going to be tricky, right? It makes me a little nervous. But just keep in mind that, if they're being employed for you less than 180 days, you don't have to hold the position. So it becomes a needs-based analysis. If they have been employed more than 180 days or more, then you have to return them to the same or substantially equivalent position. This is the same language you see in FMLA. And I will tell you that under case law, this substantially equivalent basically means the same. So I would just focus on the same, because that's really how it gets interpreted when this goes to court. You've got to maintain healthcare benefits on the same terms. You cannot count family leave as unexcused absence, right? So if you've got an absentee policy, this leave would not count. That's similar with HFWA, right? HFWA says if I use time for sick leave, you can't count that against me in the attendance policy. There is a private right of action, same as like FMLA. So I could bring a cause of action against the company if I believe I've been fired because I took this leave. It's a 2-year statute of limitations. So 2 years I have to bring this action after I would be fired, unless it's a willful violation, and then it's 3 years. So keep that in mind. That is a private right of action like FMLA. So coordination of benefits. This is what I mentioned that I think is somewhat the hardest. So first, workers' comp and unemployment, workers' comp leave, unemployment leave, they do not overlap with family. You get one or the other. So if I'm out on workers' comp, I can't get family. If I'm out, if I've been terminated, I'm getting unemployment, maybe I'm still job attached, I can't get family, right? It's one or the other. Recent rulemaking in this area has talked about family and employer provided PTO or even HFWA. So I can't get both for the same hours, and that's what the rule says. But that's, to me, not really the full story here. Your employees, as I mentioned, are not required to use or exhaust any accrued vacation, sick leave, or PTO prior to or while receiving family. So the way this works, and I was pulling out my cheat sheet here on my notes, is that essentially if an employee can choose whether they want to, let me back up a moment. So before I go out on family, let's say that it's for a domestic violence issue. I, as the employee, can choose whether I want to take that under HFWA leave, assuming I have it. Let's say I've got my 48 hours in my bucket. I can choose whether I want to take HFWA leave or family leave. And that's an employee's choice. I would obviously need to let my employer know. Now, let's say I choose to take family leave. I don't want to use my HFWA leave. So you can't require me to exhaust it first. I can take my family leave. Now, when I go out on family and I'm getting a wage replacement from the state, let's say at a certain percentage of my wages, I'm not at 100%, right? I'm not being made whole. Then you as the employer and me as the employee, we can mutually agree that the employee may use accrued leave to supplement family payments. Now, what's interesting is in the law, it says there has to be a mutual agreement for this supplement. So while the employee kind of has all the power in the beginning of which leave they take, can't exhaust. When it comes to this supplement or made whole, there has to be a mutual agreement. And I would recommend getting that in writing, since the law requires mutual agreement. So get that in writing from the employee, that you both have agreed they want to use X amount of PTO in order to make themselves whole on that weekly wage. We don't want to make overpayments, right? So they can't get more than 100%. So the employee's going to have to let you know what they're getting from the state, because overpayments can actually be recouped. If you find yourself in an overpayment situation and you've got to recoup from a paycheck, please talk with your legal counsel before you do so, because our wage theft statute has gotten so strong. But that is in there, that you can recoup overpayments. So when I was looking at this, I thought, I mean, could they have written it any more complicated, right? I mean, as far as who has the choice of what and when they, the employer employee need to agree. So just, make sure you've got that clear in your policies, even if you don't put all that language in like your handbook policy, in your internal, how are we going to make this work, procedure, make sure you've got this language in there so you understand how your benefits are going to coordinate. All right, I think this is what I was covering. Employee and employee may mutually agree. Yeah, this is what we're talking about, that they can use their accrued leave up to the average weekly wage. This is the recoupment. So if there's an overpayment, so you find out that the employee didn't tell you the appropriate number they were getting, they were actually being paid 120% of their weekly wage, you can recoup that through payroll deductions. But you would then have to replenish their bank of accrued leave if that's what was used to make the overpayment, right? So it's not like they lose the PTO hours. So if they were using PTO and they went over, then it just goes back into their PTO bank. So, we put this here, carefully track these requirements, right? What is someone using under HFWA? We're still right now in the public health emergency based on the federal level. So we still have that 80 hours of potential supplemental leave out there. And then we're going to add next year the family leave. So make sure that administratively you've figured out how to track these leaves, and to try to make it as easy as you can on yourself. So what is the notice and documentation? So notice has got to be posted as of now. So make sure you've got your posters up. I put this website here. It'll be in the materials that go out, and you can actually click on it for this link, but also this is the FAMLI site online. They've got it's called the FAMLI Toolkit for Employers. It's actually a pretty good site now. It took them a while to get everything up. There's a paycheck stuffer. We recommend putting FAMLI in your employee handbook. And then make sure that you registered your business before 4/30/23. It just opened like last month. So they were supposed to start opening it months ago, and they were pretty late getting that going. So just make sure you get registered so you can make those submission to the state. And then you can require the same documentation as under the FMLA. So if someone needs to take family leave, you can require documentation, if like a serious health condition, if you will, and what that would look like. So you can require some documentation. So that's helpful, that they can't, it's not just trusting like we've had to do with the COVID leave. So approved private plan. So what happens, so what the state's permitted is that you can substitute private plans and not have to pay into the state next year. But what happens is you're going to make the withdrawals this year, and then you apply to the family division at the state for approval of your private plan by, this is the latest date, 10/30/23, in order to get reimbursed. We'll talk about what that means. In the regulations, they put out regulations on the private plans. There's a 14-factor test and an application requirement in the division's rules that your plan has got to meet. Essentially, in a nutshell, it's that you're giving employees all the same protections as the state plan, right? So you're going to let them take time off for the same reasons. It's the 12 weeks plus the potential for pregnancy complications. It's the wage replacement percentage. So you can always be more generous, but it's going to be basically meeting all the same protections as the state plan. If they deny your private plan, there is a right to appeal before the family division. You have to give employee they have the same civil rights and remedies. So if they think that you've retaliated, even with a private plan, they could still sue. And then this reimbursement. So if you are going to do a private plan and you have to withdraw this year and pay into the state fund, if you apply by this end of October and are approved, you will get the payments that you make this year reimbursed to you. They have said that if an employer waits and they don't apply this year, so let's say that you're like, yeah, maybe we'll just do the state plan. But then come January 1, 2024, you're like, no, let's do a state plan or let's do a private plan. And you put it together and you apply, you don't get reimbursed. So if you think you want to do a private plan, take the time to decide now so that you can get what you submit to the plan, you can get reimbursed for that come next year. Because if you wait, you're not going to get reimbursed. This is the reimbursements basically for people who would have done it this year, but the state wasn't ready to go. And that's Kristen's opinion, I should say. All right, FAQ. So on the family website, if you go under the employers tab, they have employer FAQs. And like I said, I think the site's finally gotten pretty helpful. At the beginning, it was a little rough. It took them a while to get information out. They kind of kept piecemealing it to us, piecemealing the regulations out. But I think they finally have gotten some pretty good information out there. So, don't hesitate to go and look at their FAQs. And Marilyn, I'll pause there because the next thing I have is just a couple other, kind of quick notes on things we're seeing, but I thought I could pause there. And if people have questions on family, happy to take those now.
Okay. So please unmute if you want to ask your question directly or put your question in the chat. There is one question about short-term disability. So if you are an employer that provides a short-term disability plan, how does that work with family?
Yeah, good question. So I was looking here at my cheat sheet. So if you provide the required family notice and an employee, so meaning, we put the notice up this year, an employee takes family leave for a reason that also qualifies for short-term or long-term disability, you may count both the wage replacement amount and the duration of family against the benefit amounts and leave duration provided under the short-term policies. So the terms of the policies are going to govern whether the employer or employer both must notify the policy's program administrator of these concurrent family benefits that they're received. So your policy would need to define that, but you can count the wage replacement and duration of the leave against the short-term disability benefit amounts and leave duration.
So bigger picture question, should companies be looking at what they have in short-term disability policies now? Does this replace the need to offer a short-term disability plan? Or will we be seeing something different in those kinds of products in the future?
Yeah, that's a good question. I definitely would say take a look at your policy that you have. And so you can understand, because that way you can talk with your policy administrator or your broker about, what's our policy provide? How do we give notice? Making sure that you are able, that we're counting them together, right? So you're getting that credit, if you will. I don't know if it would replace, because a lot of times short-term disability provides for more payment, right? Because we saw that weekly cap of that $1,100. So, this may be where some employers, they use that as an incentive, right? So you've got the state wage replacement and we've got a short-term disability that provides, because I've seen some that provide like 85% wage replacement. Sometimes I've seen short-term policies that even go close to 100 and then long-term that cut it down, right? So yeah, but I think it's worth talking with your broker about kind of your full benefit package and what that's going to look like starting next year with these benefits. I know I was talking to an employer yesterday because they want to do a private plan. So I was letting them know, okay, let's get that ready, by maybe summer and have that ready to go. And, they've got short-term disability benefits. So, and they said their brokers approach them with that the broker's trying to get some offerings together for a private plan. So it could be interesting, Marilyn, I guess your question is, maybe, if brokers and insurance companies start saying, hey, we can do this private plan option for you, maybe that would replace your short-term disability because you could make it more generous. So you could make, so if your short-term policy is pretty generous, you could make it where you cover everything for family, but you're more generous in your plan. So I think it's worth, like I said, do that now, right? Do that this year, because if you go that private plan route, which some of you, if you have really generous plans, may be beneficial to do that. Do it now so you get the reimbursement next year.
Well, and I think that was the clarification, back to the term stackable. Can you do family and then take short-term disability, and you've gotten the benefit, the full benefit of two sets of, it's opportunity to take advantage of two sets of, not that people might have legitimate reasons for doing that, but it just, I think that's where our clarification question is how does it?
Yeah. So those would not stack, right? Since you can count the wage replacement amount and the time against the leave duration in your plan, it'd be like FMLA. They're going to run concurrently. So your short-term policies, your FMLA, it'll run concurrently. Where it stacks is with your HFWA, the paid sick leave.
Mm-hmm.
And so that's where you'd have to be careful, because one of the things I had an employer ask me, they were like, okay, so they take, let's say 16 weeks under family, they have pregnancy complications, but then they have 2 weeks of PTO. They could essentially be out 18 weeks. I'm like,
Mm-hmm.
yeah, under this law, they could. So, that's, from a cost perspective, right? You're not paying that first 16 because they're getting the state wage replacement, but you're losing an employee for 18 weeks potentially. So, yeah, so definitely taking a look at that now, because I think that to me was unfortunate that they don't require the employee to exhaust, because that's been so consistent with FMLA forever that you can require that exhaustion. So
a couple of other questions, and I know we're getting close to time. One is, so let's get into the implementation, right? You as an employer have set up all the things that you need to do, but how do you activate the benefits for an employee when they need to use it?
So if you're thinking the wage replacement, that's where the employees got to apply to the state. So part of what your policy and notice is telling the employees how to do that. And if the employee comes to you, like, I need FMLA leave, you need to notify them, look, you may qualify for family. You have an obligation to give them the state information, but they actually have to go to the state and apply for the wage replacement. So with you, they're setting up the time off. I'm going to have a baby, I need to be off these days, but the wage replacement is on the employee to go to the state and apply, because they have to be approved. And then the state has to start the benefit wage replacement. And then the employee is supposed to let you know when they receive it and how much they're receiving. It's going to be interesting to see, Marilyn, how quickly the state's able to start those payments when somebody applies. It's different if I'm having a baby in 9 months and I can apply and I have time, but I've got to go out for surgery and I only have a month notice or 2 weeks notice. I can envision that you're going to be out on the leave and the wage replacement's not going to kick in till I come back to work.
I have to share with you all that my heart just skipped a beat thinking about, okay, so I had an accident and I'm going to have to be out on leave and I have to go apply for this. What is that? Exactly my question, exactly my momentary anxiety over what's that really going to look like for reimbursement.
Yeah. And I would be very surprised if someone has an accident and goes out quickly. I just can't see the state getting someone approved in wage replacement starting all that quickly. Maybe, I guess unemployment. I know that during COVID, people were waiting months for unemployment to start. So, if that's any indication, obviously there, won't be as much. We had so many people getting unemployment at the same time, but I think there's going to be some delay.
Yeah. They're going to have to create the emergency request and the planned request.
Yeah. Yeah. That's a good point. Yeah. Of how you apply for that. And that goes to the point of the employee may come to you and say, I want to exhaust my sick leave because the state benefit hasn't kicked in. and that's where you as the employer and employee have to agree. So you could deny that request to use that supplement, but typically we'd recommend letting someone take their leave when they want to use it at that time.
Yeah.
But
Yeah.
I know we just have a couple minutes. Oh, was there another question, Marilyn? I was going to
One more question. Is this anything that's going to harm the employer that employers need to really be thinking about? Besides the upfront cost of having to pay, is it going to any way negatively impact like an employment can, if someone's terminated and then they get the benefit? Is there anything that employers need to be thinking about beyond the outlay of costs to support the investment that they're making in the program along the way and that they will make with their employer? But is there anything else that has come up that employers may have as a concern?
I think the biggest one, and I'm just thinking about what we've seen under FMLA over the years, is the retaliation claims, right? So I go out on leave and I'm not an employee who you have to return me to my same job. And so I come back, I have no job, I get fired. I bring a suit that, well, you fired me for using the leave. You really could have put me back to work. I say, so I think it's really the retaliation claims in the use of it and the return to work, because that's what we see under FMLA is you didn't let me use my leave when you should have, or you failed to return me to my job, or when I came back, you really didn't return me to the same job. You think it's substantially equivalent, but I'm no longer reporting to the VP. I don't have my same reporting structure. Even if you give me the same wage, I lost my reporting, or I lost my direct reports, or whatever it may be. So I think that's where I say, figure out how you're going to implement leave. How are you going to run your business without someone being there a certain period of time and not feel retaliatory, right? I mean, we're all human, right? So not to, and not to have that retaliation come up, because those are expensive cases. And we've seen those for years under FMLA.
Excellent. All right.
All right. The last thing I'm just going to pop up here really quick, Marilyn, just so everyone knows, because I know we only got a minute or two. Make sure you look at the new comps order. It's still comps order 38. You have to put that, if you give out handbooks again, you have to provide a new copy of that. There is an increased minimum wage, increased salary basis. We're still seeing a lot of rest period litigation. So please make sure your employees are actually taking their rest time. We are potentially anticipating that at some point the state is going to pass a reg that says rest time must be documented. So I'm not talking meal period. I'm talking those short afternoon and morning breaks. So just keep that in mind. And because we're seeing, like I said, these class actions based on rest period. There's also a new info sheet out there on HFWA. It came out the first part of December. Talking about, public health emergency, right, with flu and what that covers. There's still some, we say, myths surrounding the 8-hour rule. This could be its own kind of 30-minute discussion. So I'm just going to let you know, depending on what your policy is, are you providing 80 hours or just the 48 hours? And make sure you know how you're providing your supplement and, when they get that, because the info sheet's got this new info sheet, which is still 6B. So they didn't even put a new number on it. It was like they snuck it in. There's still some confusion around that. And then, we keep hearing, public health emergency leave's going away. Well, we'll see if the public health emergency, the COVID gets expanded on the federal level. We should know in a couple weeks. If it gets expanded again, we're in for another 3 months of supplemental leave. Right? It's still the same leave. So if someone's used their supplemental leave since 1/1/21, it's not a new bucket, but it's still out there. New employees is where it comes up. And then last one I'll just throw up here, secure savings. So we still are waiting to get information. We put October, I think this should be October 2023, because that's when we're supposed to get this implementation packet. So just keep that in mind. It doesn't replace your existing 401ks, but it is going to be a online, or state provided, basically IRA for employees who don't have 401ks, but it's still not online yet. So more to come. I'll try to get us done right about 8:32.
You are doing great. as I mentioned earlier, just as a couple of takeaways. First of all, if you don't have that poster, use that link to go get your poster. If you have not updated your employee handbook in a while, this is the time to do it. In fact, Kristen just helped us with ours to make sure that we have all of these new policies, even in our own documentation. So we've been talking about it for the last couple of years, but if you haven't updated it, update it. Make sure that you share that with your employees. We will be sending out the recording of today's information, the links that we talked about, both with the grants as well as the links that Kristen provided. We will send out, Kristen, can we have your PowerPoint presentation?
Yes, I'll make a note to
Send
send
out
that.
both the PowerPoint presentation as well as a summary of the links that have been discussed. We are always here as a resource to you. One of the reasons that this is the first topic of the year is because about December 15th, I started getting lots and lots and lots of emails and calls from our contractor members to say, hey, have you guys talked about FAMLI? Are there any resources that you can help us with to kick this off and get it started? So please always reach out to me if you have a question, a business challenge. If you have the question, so do 280 other members of our association, companies that are dealing with the same issues. So we want to be that valuable resource to you. So please let me know if you have any additional questions. We will get them to Kristen. This is an amazing resource that Kristen provides to us as an association so that you're not having to make these individual calls. So we want to make sure that we're using her time and your time wisely in addressing these business challenges. With that, I will say Happy New Year. And thank you all. Have a wonderful rest of the day and look for this information to come to your email box later in the day. Kristen, thank you.
Absolutely. Thanks, Marilyn. I'll get that the PowerPoint over to you later today.
Sounds great. Thanks all.
Bye-bye.